Right, everybody, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I'll be once again your presenter for today's webinar. Today is, of course, the market movers of the 19th of September 2017. Just a second, there seems to be, Let's just switch the first slide and just the usual request. If you guys can both see those screen slides change and hear my voice, I would appreciate a very short yes or why in that small questions box. And please, throughout the course of today's webinar, if there are any questions, please feel free to put those questions into that box, and I'll do my very best to answer those questions as we move through the webinar. Today's session is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through those carefully and make sure that you are fully comfortable with them. Essentially, this says that trading, of course, involves risk, and that you should understand those risks and the risk associated with the instruments you're using before you're getting active in the market. As neither Traders Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be looking at the markets on the live charts together. Those setups that I will be discussing there are really just what I'm seeing on those charts. It's never a trade recommendation. So please make sure you're okay with this before continuing with the webinar. Thank you very much, everybody, for the feedback on both the audio and the video. Really appreciate it. And before we finally get started, there's also the risk warning, this time from Nadex itself. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative for future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just have a look at today's agenda. Today, of course, we want to look at the markets, and we want to approach those markets from a very strategic point of view. It doesn't make sense for me to just have a look at the chart and from a gut feeling act upon that gut feeling and decide if I want to buy or sell that market. I want to have a strategy. I want to be consistent with my trading. Because if what I'm doing is working and I keep on doing the same thing over and over and over again, although there will be losing trades and I just can't do away with those. I would love to, but there will always be losing trades. But if I have a good, solid, proven strategy, in the end, in the long run, which means over a large sample set of trades, I should be able to come out ahead, which means I should be able to win those trades more often than I lose them, and I will have losing trades once again. And the next thing is my potentially profitable trades should be larger than those trades where I will be losing money. And so the idea is here to approach those markets with a strategy. I'm looking for certain aspects, for certain components, which build my trading strategy. Once I'm able to identify those, there might be a setup hiding there. So without much further ado, let's have a look at the markets together. And I'm just switching now over here to my charting platform. And I want to start today with the US dollar against the Canadian dollar. Let's get started here on those higher time frames. Why am I looking at multiple time frames? Because I want those different time frames to tell me the same story. The idea is here that I want to have a look at a scenery, but I want to have that look from different angles. And those time frames will give me those different angles. And if I like the scenery from angle A, I probably should also like it from angle B or C. Just think about real estate. If a house looks beautiful from the front side, but if you just move a little bit to the side or have a look from the backyard and it's just trash, you probably don't want to buy that house. It's the same thing here with the market. If it looks beautifully on one chart, on one time frame, but this beautiful image just falls apart if you move to different time frames, it's probably not that good of a setup at all. And so I want to get that same picture, that same idea for one market by looking at different time frames. So what can I see on this market here, on this chart here? It's the US dollar against the Canadian dollar. And the first thing is I'm trying to fit in now my levels. And you can see, I just picked my levels. I see the market has reacted to this level here and there, some reaction over here as well, and here. And now we've just broken below this level. It's the monthly chart, so this is already some time here back away. And let's try to pick another level. And you see, I just pick it and I try to find an area where market price has been reacting to this level. We see a touch here, another touch here and there. And here, once again, price has been reacting to this level as well. Do we have levels here in between? Let's just try to find some. And sure enough, we see reaction here and there and here once again. And this is how I identify those levels in the market. Are there any levels where price has been trading right now? Not that clearly, just judging from the monthly chart. You can see that there might be a level also sitting there, and we're just trading below this level here on the monthly chart. So you see where price is trading right now, pretty much here is in no man's land. And judging from the monthly chart, we still have some good way to for price to travel before we hit this next level. Those levels are on my chart, and they will stay on my chart, because once this support level here, when price is coming from above this level, that's a support level. Once this level is broken and price is trading below this level, support becomes resistance and the other way around. So once we trade back above and break above this resistance level, it will be acting as support again. Now, the question is, what is market, or what's the price doing here right now? What's the big picture? And the big picture that I'm seeing here is that price was in an uptrend here until the beginning of 2016. And then price just pulled back and started to make a new high, but it was a lower high than before. We made a higher low and we made another higher high. But overall, we're still sitting way below those levels here of 145. And since then, clearly, that's weakness compared to this huge run-up that we saw here. And we can see that while those moving averages, the 10, 20, and 50, had been fanning here, had been spreading out, this distance here clearly came down, much more weakness in the market. And now finally, the 10 has crossed below the 20. This cross on its own doesn't mean a thing. It's not actionable for me. I don't trade upon those crosses. I just want to see my fanning pattern, because this usually gives me a good strong trend, which we had here for 2014 to 2016. What's the context that I'm seeing now? Well, price made a very, I want to avoid the term poor high, because this is coming from volume and market profile theory, and it means something else. But I hope you can see that this high, this higher high here, wasn't that strong. It's a weak performance, let's put it that way. However, since then, clearly here a new lower low, and it's not only a lower low compared to the previous low that we saw here, but also to that one over there. And all over the time, we have seen a loss in momentum, both in MACD and in RSI, further suggesting the idea that this market is pretty weak. That's the weekly chart. So the weekly chart, while not giving me that perfect setup that I'm looking for, definitely signals weakness to me. Let's have a look. Did I see a weekly chart? Sorry guys, I definitely meant monthly chart. We were looking at the monthly chart. The monthly chart has been showing weakness to me, because now we want to have a look at the weekly chart. And on the weekly chart, I start already to get what I've been looking for. I'm getting now my beautiful fanning pattern. I see that price is in a clear downtrend. We can clearly identify the lower lows and the lower highs. We see the fanning pattern in our moving averages. We see that we have convergence here as price is making new lower lows. MACD is making new lower lows. RSI is making new lower lows as well. That's clearly the picture here of a well-established downtrend that we have here. Price is a little bit away from my moving average sell zone. I would prefer if it was a wee bit closer there. But again, the candle for today's price action, or this week's price action, is showing me already some bearish signatures. Why is it bearish? It's a green candle after all. Well, price tried to push higher. This is what made the upper shadow, this upper wick. And in the end, price hasn't been able, at least so far, remember, it's just Tuesday, to actually follow through and give us that higher structure that we're looking for here. So the body pretty much only covers 50% of the range, and this isn't a sign of strength so far. A little bit overextended, could be closer, but the big picture that we're getting here from the daily chart again is pretty much, from the weekly chart is pretty much that of a bearish market, well-established downtrend. Let's have a look here at the daily chart. And if we have a look at the daily chart, let's try to squeeze in another level here and find if we can see something. Yeah, price has reacted to this level of around about 124 here very nicely and precisely. Also here, several more or less precise touches, and we're sitting below this level. What is the trend on this chart? Once again, it's a downtrend. It has been a beautiful downtrend over there. This pullback here was a little bit too deep. We also see that our fanning moving averages have started to close down, started to narrow down. However, once again, this downtrend resumed and it gained again momentum. You can see that we have convergence here on this last move. Yes, from this big move over there, that's divergent. But the most recent low was this low, and the previous one was there. And we compare this high with that high and that high. And sure enough, we have convergence on those moves. Now, what are we seeing here with today's price action? With today's price action, we can see the price has once again just pulled back now to here to our moving average sell zone, and it's giving me exactly what I'm usually looking for. It's giving me a small bearish candle setting up directly here in the sell zone. A further thing that I'm always trying to also at least have a look at is putting in my FIB retracements, and I can see that this retracement here took us directly to the 38.2% retracement level. I usually want to see a retracement at least to that level. If it was the 50% level or the 61.8, that would be an even better and stronger indication that this pullback might be over. With the regard to the sell zone that we're seeing here, what we're seeing here is good enough for me to consider actually here a potential short trading opportunity. Let's get rid of those FIB retracements. Small bearish candle in the sell zone. Now, how would I trade that setup with conventional instruments? Directly we have forex or we have futures or something like that. My stop loss location would be just above the high of this candle, because the idea here is this pullback is over. The market has retraced, it's caught its breath again, and it's gathering strength for another leg down. And I assume that this could be the new lower high. And that's the most basic assumption of about my trade. And if we see a pullback now that goes beyond this high, this means it's not the new lower high. The retracement might not be over, the trend might be changing, but at that point when I considered that trade, that idea, that assumption would be wrong, would be proven wrong. And for that reason, I would want to be out of that position once price triggers and pushes beyond and above the high of that green candle. My entry would be sitting just below the low of today's candle. I want today's candle to finish printing. It must be over. I'm not trading of a candle which is still changing its value. Let's just assume it's tonight. This candle is over, is done, and that would be the structure. Then this would be my entry, just below the low of this candle. And the distance that we're seeing here now between my stop loss and my entry, that's my risk, that's the distance. And my first profit target would be just a one-to-one target sitting pretty much there. And this is why I would like this setup here quite a bit, because you can see that distance is quite small, it's narrow, which would give me a one-to-one profit target already on a way to retest the old low. This tight range doesn't require market price to move so far to actually make a new low to give me at least a one-to-one. No, I get a potential one-to-one. We never know nothing for sure when it comes to trading. And if I talk about winning trades, I always mean potentially profitable trades, because I don't know if it's going to work out or not. So always keep that in mind. One-to-one profit target here. And my 2-to-1 reward to risk trade ratio could also be very close to a retest of those old lows. This is why I like those small candles, those tight setups. This is how this could be potentially tradable here now on the daily chart with conventional instruments. But we're here at Nadex, and for that reason, why not have a look at how this could be tradable with also with binaries, of course. Now we see the monthly chart shows us weakness. The weekly chart retracement might still be going on. The daily pretty much looks like a not picture perfect, but pretty close to picture perfect potential short trading opportunity. Let's have a look at those lower time frames. And usually if the daily starts to drop and starts to move down, I usually want to see this kind of behavior here as well on the lower time frames, especially the 5 and 15-minute charts. Why is the 2-hour chart, 4-hour chart, and yeah, pretty much the 8-hour also, those look rather bullish, don't they? They have to look that way, because that's the retracement that we have been seeing on the daily chart. This retracement has to take place somewhere, and it definitely took place here on the 2-hour and 4-hour chart. But overall, the big picture coming from those higher time frames is showing us weakness, is showing us bearish momentum. And the first time frames which will then start to follow suit are obviously here, those shorter time frames like the 5-minute, like the 15-minute chart. And if I want to trade those time frames, I could be looking now here at my, let's have a look at the forex binaries. And I'm looking at US dollar CAD. And let's just have a look here. That's my problem, guys. I have just been showing. I had logged in before the session, and then it gives me a timeout. So let me just quickly refresh what we're seeing here. And just a second. Yeah, there we are. Just a quick refresh and everything's back to normal. So we're looking here at different expiry cycles, and for this one here we still have about 1 hour and 42 minutes left. Now what can I see here on that 5-minute chart? Well, price is currently pulling back once again to my moving average sell zone, and the same assumption about my potential trade that I made on the daily chart would be true here for a trade on the 5-minute chart. Do I want to short this market at any price level? No, I want to potentially short it in general, independent of direction. I want to have a good trade location. I want to enter my position at price levels which don't give me too much risk on my entry. If I'm entering here at extended price levels, look how far we are away here from my moving average sell zone. What's likely if we are overextended? Pullback is rather likely, and this pullback is what we're just getting here. So shorting this market here appears, at least to me, to be more risky than waiting for a pullback once price has moved back, has relaxed a little bit, and then wait for a potential short trading opportunity there. Again, that's just one of the components that we're looking for when it comes to our trading, formulating our trading decisions. So you could be saying, okay, if I see that pullback, I want to trade that pullback. Then you would be looking into potentially buying one of those contracts. Keep in mind that this could be or would be a counter trend trade, not only on the 5-minute chart, but also on the daily and on the weekly and also on the monthly. Essentially, you're trying to swim against the current to make a few quick points. Nothing wrong with that, but understand that, at least to me, this appears to be more risky than waiting for a good trade location and then looking for a trend continuation. So if we think market might be going lower, we could be looking, for example, into selling that contract here. Why did I pick that contract with a strike price of 122.59? Well, it's not terribly far away. It's still in somewhat striking distance. How do I know? If it was deep in the money, the price would be very close to 100. This is not close to 100, but it's definitely in the money, and price has to travel a little bit. And in the end, I have to balance several things when it comes to picking the proper contract here. First thing, what is the mathematical probability that this trade could be a winning trade? Well, I just take the mid price of those trades here, of those quotes, and that's the mathematical probability that this contract will be at the money, or the underlying will be trading at the money of at the strike price, or at the money at expiry. So the probability right now is 67% that this trade will be, or the underlying will be trading at the money. So my probability, if I want to short this market, would be something like just 33% that it could be a potentially profitable trade. However, I'm being paid for that because right now I would be, if that trade was working out in the end, which I don't know, my potential maximum profit could be $64.50. I were to get what I just got for selling that contract. If I have to settle this contract, if it's a losing trade for me, it will cost me just $34.75. So the smaller probability that this trade could be working out for me from a mathematical point of view is compensated by a better reward to risk ratio. I'm risking 35 for the potential to make 64, not quite, but quite close to 2-to-1. Now, what about position sizing? I want my trades to be consistent, and I'm looking here now at an account size of $21,000, $841. It's a demo account. If you haven't registered for a demo account, please do so. It's the perfect way to try and to test the platform and to get used on how everything handles here. And with my trading, I'm always looking into risking about 1% of my account on any one given trade. If that trade goes bad, I lost 1% of my account. It's not nice, but I don't care because 1% is so little. I can try. I will come back tomorrow and trade and try again. And so you must make sure that no single one trade is able to wipe out your account. So what is 1% of $21,800? Well, I could be risking now potentially here up to $218. So I'm just clicking those numbers up, and until I see my maximum loss is 224. That's too much. So I'm trading 6 contracts here for a maximum loss of 192. And if it's going to work out, could be $408. Reward to risk ratio in my favor, probability of working out not quite as much. And this trade has now 1 hour and 37 minutes left in order to potentially prove itself and show that it works out for me. You see that trade is live. The order was live. The order has been executed, and now that position is on. If on the other hand you think markets might still be going higher, this retracement isn't over. I'm looking here for something a little bit more punchy. You could be looking at a different expiry cycle. If you, for example, say, wait a minute, the weekly chart is still overextended, and I think price might still be going higher. Why not have a look at the weekly expiry cycle then, and then have a look at something like this strike price here. It's out of the money, which is why it's cheaper. The market currently tells you that we have about a 30% probability from a mathematical point of view that the market might be trading at, or the underlying might be trading at this strike price once that contract expires. And same basic assumption here. I could be trading now up to 6 contracts. My maximum loss would be $211.50. If it was going to work out in the end, I could potentially make up to $388.50. Just let's place that order. Also, again, don't follow me in those orders. It's just for educational purpose. I wanted to show you guys how you could trade different assumptions here, different time frames, different expiry cycles, and also to try to balance things. I don't want to suggest that either a short position or long position is a good idea. You have to come up with that idea on your own. I know what I'm trading, but in the end, you have to find a trading strategy that works for you and that makes sense for you. So let's keep that in mind. Let's have a look at another market. As I said, that market's looking quite interesting to me right now. Let's have a look at the big elephant in the room, and this is obviously now the S&P 500. That market has been trading very close to this 2,500 level. has been approaching for some time and finally was able to push beyond those last levels of resistance that we saw here on the weekly chart. And now we're trading above the level of 2,500. It's not that big breakout and breakthrough that might have been expected once price pushed above this level. Usually you want to see some kind of pressure building up, and then you see that big eruption. Price has broken through that level and all this tension and pressure is being released. The market is pushing higher. Didn't happen here. It's still quite reluctant, and you see we're just 5 points away, which is pretty much 20 ticks above the level itself. So that's almost nothing. It's still very, very clingy and close to that level. However, we see that our moving averages have been fanning for quite some time. We are still here on the weekly chart in a very well solid defined uptrend now. However, we see some loss of momentum here currently, both in MACD and RSI. When we made this new higher high, both MACD and RSI didn't follow suit. They gave us lower highs, at least so far. We have to wait and see what price is doing here over the next few days. But I think this is rather interesting here to see and note what's been going on there on the weekly chart. The daily chart is clearly giving us new higher highs here. And we also have some good convergence here on MACD and RSI. And once we start to drop down here again with our time frames, and for example, have a look here at the 60-minute chart, and let's zoom out here a little bit. It's easy to see which levels have been defining this market for quite some time now. And if we start to add new levels here and see if we can identify some of those, it becomes pretty clear that this here is a new level sitting at 2,504 and 1 tick roundabout, with touches here and there, and pretty much closing prices sitting at those, and opening prices sitting at those levels. So that's the next one, and the question is if we put some here, we have several touches here as well. So, but once again, also here on the hourly chart, please note that we have seen a loss of momentum in both MACD and RSI. We have seen a run-up, and this run-up was pretty steep, and a retest. And since then, we have been trading pretty much sideways for all those hourly candles. Now, just recently, on the last retest, we have started to see that this is a higher low here in MACD, RSI, pretty much the same level. There might be some momentum building up, but this extended sideways period that we saw here, clearly a loss of momentum. It's not that much sign of strength. The political news coming from the United Nations, not sure if this is also very supportive of a good, strong market. Keep always in mind, we have to check not the fundamentals per se, but rather we want to check the news. We want to be aware of the Fed session, for example, the FOMC meeting. We want to be aware of those political events and something being in the pipeline there. Yes, new higher highs, trading above 2,500, not that strong. I'm not really that bullish on that market at the time being. If we get a clear push higher, some more momentum coming into that market, then the picture might be completely different. But here, right now, judging from the hourly chart, I wouldn't be surprised to see a pullback here to a retest of those 2,496 level, something like that, and some more range-bound action here over the next few hours and days. But that's just me. I don't have a crystal ball. And in the end, you have to read those charts yourself and have to arrive at your own conclusions. All right, everybody, time's pretty much up. So let me quickly jump back here to our slides. Yeah, that's it pretty much for today. So thank you very much, everybody, for tuning in. I hope you see that it's important to not only have a good, solid platform and exchange to trade those binary contracts and spreads on, but also you must have a battle plan. You must have an idea, and only once you have that strategy and that potential setup which you want to trade, then the question is, how can I trade that best using Nadex contracts? The idea, the setup always should be there first. If you want to practice how to put on those trades, please sign up for demo accounts. You can use those accounts for as long as you would like. Nothing wrong there. Just get a hang of it. Get used to it, so that the platform, it's very easy to use. I hope you've seen that. If you're just clicking around for the first time, don't be intimidated. You can't do anything wrong on the demo account. That's what it's there for. If you want to learn more about Nadex, you have different ways to be in touch here with Nadex and how you can become a member of the exchange. You see the homepage. If you want to be in touch with the good guys at Nadex, please reach out to them. And yeah, thank you very much for tuning in, everybody. I hope you enjoyed today's session and that you found it useful. And usually after this webinar, there should be a short survey. So any feedback that you have for us, please give us that feedback. We're running those sessions for you. We want you to get the perfect benefit out of your time that you spend here with us. So anything that you have for us to improve our performance, our delivery for you, please let us know. So thanks again. It's been a pleasure for me. Thank you for tuning in. And now to all of you, have a great trading day. Happy trading. Catch you next time. Thanks again. Take care and bye-bye.